Let's start. Listen. Now, this is slightly a easier part that we all are doing now. Slightly a easier part. Okay. Question number 20 and 21 more or less are there on the same particular lines only. Let's start it off with question number 20, please. Now, it will have material, it will have labor. That part you are going to be doing. I'm going to be doing the new part, that is of variable overheads. Okay, listen. A company produces a single product from a single material. Okay. I made you all do the previous question, all the variances, although it was not asked also, but still I made you all do that. Now tell me one thing, if there is only one type of material that is there, which out of the 5 variances of material will become 0 because there is one type of material? Material mix variance, because mix takes care of ratio. Boss, ratio is of 2 or more materials, no? If there is only one type of material, mix variance will always be 0. One thing. If mix variance is 0, can we say usage variance will become same as yield variance, no? Okay, so do one thing. You might have written material usage variance. You can write down over here / yield variance. Both of them in any case will become same because there is one type of material in this question. Okay, further. It operates standard costing system and furnishes you the following information. Standard data is for a production of 8,000 units. For 8,000 units, 16,000 kgs should have been consumed. Total amount 32,000. Labor hours 2,400, 3,000. But in reality, 6,000 units were made. Okay. And this was a material, this was the amount. This was a labor hours, this was the amount. I'm not reading the last part, I'll take care of that. You are required to compute necessary variances. Now, necessary variances will mean all your material variances, all your labor variances. Okay. Now, tell me first of all, both material and labor are dependent upon what factor? Output. Tell me standard data is for what level of output? 8,000. But in reality, what was your output? 6,000. So, revised standard will be made for 6,000. Now, one thing more over here. You all will understand. But for labor also, in this case, there is only one type of labor. So, therefore, one thing. Labor mix will become 0. Tell me, is there any idle time given to you in this question? No. So, therefore, in any case, idle time variance will also be 0. In your last question, no? You computed 5 variances for labor. Originally, I have taught you all 6 variances. Which one? Total labor cost, labor rate. Then labor idle time, which will be 0. Then labor efficiency. Labor efficiency has 2 parts, mix and yield variance. Obviously, mix variance will also be 0 because there is one type of labor. So, therefore, your efficiency variance will also become same as your yield variance. You can write down efficiency / yield variance. You will have got 6 minutes for 6 variances. It will be one of the simplest questions that you all have done. Okay. Please complete material and labor. Do not touch your variable overheads. I am giving you all 6 minutes. Ensure that it is done in that much amount of time. There will not be a problem. More than enough time. Finish. 8,000, 6,000, 6,000. Finished? Okay. Now see. Now variable overheads is going to be a new thing for us, okay, but not much new, to be very honest, and this is the last thing that you are seeing in standard costing, which is similar to material and labor, because after this things are going to be very different. Okay. Now variable overheads, see, whenever we talk of material, we know what you mean by material, right? If suppose this pen is supposed to be produced, plastic is material. When we talk of labor, we know what you mean by labor. So labor is any factor of production who is working to produce your product, a human factor of production. So my workers who make this particular product, those guys are direct labor. But then overheads is not an expense, it is head of expense. There might be 30, 40 expenses that can be categorized as variable overheads. So overheads is not an expense beta by itself, it is head of an expense. We try to categorize all the expenses into overheads. Okay, so overheads, you all have done your entire chapter here of overheads, what to tell you all. So overheads is not an expense, it is head of expense, and overheads could be of so many types. For your CA Inter, all overheads will always be deemed to be factory overheads. For your CA Inter, all overheads will be deemed to be factory. No admin, no S&D, not there in your portion. Okay, so all your overheads will be your factory overheads. But in factory overheads also, there are two kinds, beta. Variable and fixed. For the timing, I am doing variable overheads, not fixed overheads. Okay. Now, variable overheads means variable factory overheads. They are slightly similar to material and labor. Why? If for 1 unit, whenever you all produce 1 unit, if you are going to be incurring material cost, you are going to be incurring your labor cost. Beta, even variable factory overheads will also get incurred. Try to be thinking like this. Material cost is always dependent upon output, of course. Whenever you produce, material cost is incurred. Labor is also dependent upon output. Whenever you produce, labor cost is also incurred. But try to be thinking, even variable factory overheads is dependent upon output only. Think of your cost sheet. To get per unit of factory overheads, we divide by quantity produced, no? Am I correct? All factory overheads, we divide by quantity produced, no? To get per unit figure. Yes. Now, this particular figure is variable. Material is direct material. Direct means it is variable. Labor is direct labor. Direct means it is variable. But a variable factory overheads by its name also is variable only. Yeah. So whatever applies to material, whatever applies to labor should also be applicable to variable factory overheads. Okay. But as I told, variable factory overheads is a head of expense. It is not an expense by itself. It is head of expense. Again for your CA Inter, think whatever I am saying, again for your CA Inter, there might be so many expenses that can be categorized as variable overheads, as variable factory overheads. To give you a small example, suppose coal that is used inside your machines, that could be say variable factory overhead. More you will produce, more coal will be getting used for the machines. Electricity. All these particular things will be nothing but your variable factory overheads. For your study purposes only, in CA Inter, variable overheads will be deemed to be an expense like electricity only. Okay. And electricity is incurred whenever the workers work. So do one thing. You all write down over here C, write down variable factory overheads. Example, electricity. Now see, so variable overheads for you all will mean electricity expense for CA Inter. Let's talk of your CA Inter only, not of CA Final. Okay, so your variable factory overheads will be something like, in this case, your electricity cost. Okay, so material is dependent upon output, labor is dependent upon output. Last time ever, variable factory overheads are also dependent upon what they are, output only. Okay, so now try to be thinking for variable overheads also, no, given a choice, I would like to be having a format like R straight amount, R straight amount, R straight amount. But then you all will understand, Beta, hours of electricity will never ever be independent hours. Can we say electricity will be consumed for the same number of hours as a worker will be working? Okay, so therefore, if for 8,000 units, worker should have taken 2,400 hours, can we say electricity also should have been used for 2,400 hours only? So copy paste, 2,400 gets copied over here. Hours of labor will be same as your hours of electricity. Now check your textbook please. For producing 8,000 units, variable overheads, that is your electricity expense, should have been 2,400. So write down over here 2,400. Obviously, standard rate of electricity is 1. Please do remember, this 1.25 is nothing but wage rate. This particular 1.25 is wage rate. It is labor cost here. This 1 rupee is nothing but electricity rate per hour. Now, next thing you all will also get it. Can we say if you are going to be copying these hours, you are also going to be copying these hours, no? If you all will cross multiply, you will get same answer, no yaar. 1800 at the rate of 1, 1800. Further. In this particular case, your actual data. Now see, I am never ever saying this data will be same as this data. You all will understand in 5 minutes the meaning of this particular statement. But in this particular question, this data will be same as this particular data. Why? Because workers have worked for 2,000 hours. Can we say workers have worked for 2,000 hours? 2,000 hours of electricity bill also would have come, no? So therefore, over here write down 2,000. I'm asking you all in advance because I think you all are a bit intelligent people. You all tell me, when will this data and this data not be same as per you? When there is abnormal idle time, that will be our next question. So therefore, hold on for that if somebody has not understood. Actual electricity bill was 2,200. So actual rate was 1.1. Now you all will understand. So I have this data as standard data. I have this data as actual data. You compute your variances. Now variances are ditto going to be same as labor only, whatever we all have done. Names will change. Be careful. First question, we all can write down the formula also. That will be far better. Write down total, or you can write down your variable overhead cost variance also. That's okay. Is equal to standard variable overheads minus actual variable overheads. So therefore, electricity bill should have been 1800. It was 2200, 400 adverse. Second. Now, names you will have to remember for sure. There is no option for that. Okay. Now, two parts of this. It's common sense here. Why will your electricity bill be 400 rupees higher? Can we say there are two reasons only which are possible? Either rate of electricity would have changed or hours would have changed. Is that all okay? Yes. Correct, no? There is no third reason as such which is possible here. Okay, so therefore in this case either hours will be changing or rate will be changing. For rate, no, you have a variance called as variable overhead expenditure variance. But it is exactly calculated like your rate variance only. So therefore standard rate minus actual rate. Outside you all write down into actual hours worked. So, tell me what minus what into what? 1 minus 1.1 into 2000. Then variable overhead efficiency variance, standard hours minus actual hours worked into standard rate. So electricity should have been used for 1800 hours. It was used for 2000 hours. into 1 rupee 200 adverse. It's your first problem, so you all can write down the check also over here. Obviously, this will tally with this plus this. Please write down your check. Now, listen. Here, this particular job is done. Okay. Now, everybody will do this particular thing for me. Question number 20 and 21 are ditto same. You tell me what is the difference? Except the question number, please. There are 300 idle hours. Can you say by default idle time means abnormal idle time, no? Now, idle time should not affect material. So, material and all will be remaining same only, beta. Okay. Obviously, what will be changing is wherever hours come. Hours will be coming in labor. Hours will be coming in variable overheads. You all do one thing. Obviously, you all cannot do copy paste, but just wait. Just wait. Let's only copy that data that I will require. Okay. Listen, listen, listen. So, now this is question number 21. Okay. In your notebooks, you all write down question number 21 and write down one line first. Material variances will be same. Material variances will be same. Is that written? Yes. Now listen, next thing, listen. Can we say idle time means abnormal idle time, and abnormal idle time is only there in the actual data, no? Okay, actual data will only include that abnormal idle time. So therefore, one small thing, standards will not change only. So therefore, I am not making the standards only. You forget it. Okay. So we'll only try to be making revised standard and actual. Okay. Now, just wait. Revised standard in any case will remain same because the standard will remain same. Actual we all will try to be seeing. You all copy down this, then we will start. Just a sec, I'll delete this part. Yeah, copy down please. So just do remember 3 names of variable overheads that we all have written down right now. Now listen. Now you do one thing. Difference between last question and this particular question is what? Can everybody speak once please? In actual data you have your idle time also. Okay, so let's start to be doing that particular thing now. Listen. So this is a So this is a question that's there. Okay, question number 21. Listen. Now, see this particular data and tell me how much I should write down over here. How much actual labor hours I should write down? 2000 only, beta, obviously. Actual labor is this particular thing only, your labor hours. Tell me how much is the actual amount? 3000. So, this will remain same only. But listen. Variances will not remain same. Why? Don't write, listen. First, don't write total labor cost variance. Okay, your first variance will get over in one single line only. Second, labor rate variance. Now tell me one thing in this question, is there idle time now? Yes, sir. So therefore idle time variance will also be coming. So therefore labor idle time variance. Then your fourth variance will be labor efficiency variance. Now labor efficiency should be having two parts. One is mix, one is yield variance. You all tell me, will there be mix variance in this question? No. Why? There is only one type of labor. So therefore efficiency variance will also become equal to yield variance. Okay. You have four variances to complete. I know that in this case something might not tally towards the end. So you might do a fault. In case you forget, which you all should not, obviously your check will be taking care, beta. This should tally with this plus this plus this. In case it still does not tally, then do one cheating. Go back to your chart 2. You all have written down all the formulas for labor. In case you all don't remember, as per me, that situation should not come also. But finish off your four variances. Finish it off. Finish. I think you all should have finished by now. I think so. If for some people it is not tallying, see this. 2250 minus 3000, obviously 750 adverse. 1.25 minus 1.50 into 2000, this is 500 adverse. Now in 2000 hours, how many are idle hours? 300. 300 into 1.25, this variance is always adverse, 375 adverse. Once your idle time variance is over, hours paid for will get converted into hours worked, correct, no? So therefore in this particular case, it will be 1800 hours minus 1700 hours into 1.25. This is 125 favorable. That's it. I don't think so. You all require more time. You all write on C, variable overhead variances. Now, I'm not writing the formulas because we all have done that last time. Okay, so let's start to be computing it. Total variable overhead cost variance. Now see, but obviously for that I need to be completing the format here. Now first of all tell me, how much was the actual electricity bill? See question number 21 please, not 20. So how much was the electricity bill, beta? 2200. So therefore this is 2200. Further, now can we say over here I require hours of electricity, no? We are doing electricity variances, we are not trying to be doing the labor variances now. So therefore over here I should be writing how many hours electricity was used. So tell me, as per you all, how many hours electricity was used? 1700. How did 1700 come? Obviously, workers had come to the factory for how many hours here? 2000. But out of that, 300 hours they did not work. So therefore, they must have worked for 1700 hours. If they have worked for 1700 hours, can you say electricity also must have been used for 1700 hours, no? That is what I usually try to be thinking. Somebody can be saying, sir, during idle time, electricity will not get used. Usually, I would like to be thinking it will not be getting used. If somebody says, give an example, but before that, before I give an example, you will have to tell me. Tell me, why will workers be idle? I should be knowing the reason of being idle, right? Okay, you tell me, why will the workers be idle? Anybody can give me any reason. Electricity gone. Chalo, that was the first thing that somebody told. Can you say, if electricity will be gone, for sure this figure will be 1700, no? Because 300 hours, there was no electricity only. So, electricity in this particular case would have been used only for 1700 hours. Is that all okay? Now, some other reason somebody will have to try to give. Tell me, why will workers be idle? Machine breakdown. Okay. Suppose in this case, workers came to the factory for 2000 hours. They were working. Suddenly, the machine broke down, became faulty. So, they were unable to work. Their manager came. and ask them, what are you doing? Workers told, sir, we can't do anything because the machine is faulty. Manager again asked, so what are you doing? They told, sir, there is nothing to do, so we are looking here and there, sir, because there is nothing to do. Manager told, you want to be looking here and there? Okay, workers told, yes. They told, get out. Okay, the manager told, get out and see outside here and there. Okay, you all will understand, the moment workers will go out, will switch off the electricity, no? Electricity cannot be idle, no, in life. Switch it off, no? After your exams, if you will go on vacation, will you keep the electricity on and go? No, you switch it off and go now. Okay, now somebody might give a phaltu, sir, refrigerator will still be on. Okay, I don't talk of those examples. I'm trying to talk of a factory. Okay, but by default, obviously there cannot be idle time of electricity. See, workers know labor is a human factor of production. He comes to the factory, wants to be working, but machine broke down. Worker will still be getting paid for those 300 hours. That is why it is included over here. But electricity does not come to the factory. If it is of no use, you switch it off, no? That is why in case of labor, we always write down over here hours paid for, because workers get paid for idle time. But obviously over here in this particular case, you will always be writing which hours? Hours worked. So write down over here 1700. Now pick up your calci. Just a second. I guess this figure was 2200, no? Actual electricity bill was 2200 from here, no, yaar, what I am doing. Okay, pick up your calci, divide this by this. Now, if ever in standard costing, exact rate does not come. Nobody is going to be writing that fractions. You write down the things like this only, please. Do not compute on your calci. This is, you write it off like this if it does not come fully accurate. If it was exactly 1.2, I will write it. But if it does not come, it is an unending fraction. Then in that particular case, you write it off like this only. Now let's compute in this particular case our three variances for variable overheads. So therefore, first one, 1700 minus 2200, 500 adverse. Second, sorry, what 1800, this is the amount, what I am doing here. 1800 minus 2200, 400 adverse. Second, variable overhead expenditure variance. Now this everybody will be doing with me. Now tell me the numbers. What should have been the rate, beta? This is rate variance only, no? 1. Tell me what was the actual rate? 2200 upon 1700 into actual hours worked 1700. Now listen, all you Aryabhats and Shakuntala Devis, you listen. If you don't know the names of these people, sorry. To solve this, no, please don't use your calci, use your common sense. Open the brackets. This into this. This into this will be how much, beta? 1700. Then you multiply this into this. This into this will be how much? 2200. Actual is more than this by 500, so therefore cost is more adverse. Everybody understood my signs? Yes. Okay, thank you. Third, variable overhead efficiency variance. Now, variable overhead efficiency variance in this particular case, regular stuff now, beta, this is. So, electricity should have been used for 1800 hours. It was used for 1700 hours at the rate of 100 favorable. You can write down the check if you all want. Done? Listen, now do one thing, go over to your chart 3 please. In your textbook, go over to your chart 3. The animation has started, just a sec. Now over there you will be finding your variable overheads. Okay, first of all you all write down below variable overheads. It depends upon what beta? It depends upon output. So write down for variable overheads also. Output. And you have your three variances. In your previous question, you all have written your three variances formula. Just copy it down, please. Listen, everybody will start off the next question and will finish it off. It is only on variable overheads, no material, no labor. So only make your format for variable overheads and then finish off the question, please. This is question number 22. Start and finish it off completely by yourself. You will not require my help for any reason. You can make your given standard, revised standard, actual. Finish off. Once it is done, for question number 23, I am making something that you all do. (22) beta. I am making the format for 23. Once 22 is done, then you all make the format. 23 is on fixed overheads. You will not be able to do also. We have not learned that till now. Okay. Yep. That question is done. That question is done. Okay. Copy down this. Yeah, just a sec, just you're not starting, just copy it. Done, beta. Just a sec. Now see, only work that I'm giving you all. First of all, this is unlike anything that you all have done in standard costing. Unlike anything, okay? This is fixed overheads. Why it is unlike any other thing that you all have done? Beta, whenever you produce one unit, you incur material cost, you incur labor cost, you incur variable overheads also. So all of them are dependent upon output. But fixed overheads, whenever you produce one unit, you don't pay rental. Whenever you produce one unit, you don't charge depreciation. Whenever you produce one unit, you don't pay the salaries of your manager up and so on. So fixed overheads is not dependent upon output. If I'll ever be thinking, yeah, then fixed overheads are dependent upon what? I think fixed overheads are only dependent upon period. If you'll start to be thinking rent, okay, can you say rent is per month or per quarter or per annum? No, it is not per unit, no. So these particular expenses are dependent upon period. They are always dependent upon what factor? Period. So if actual data is of 1 year, standard data is also of 1 year, everything is fine. You can start away with the question. If ever actual data is of 1 year, but standard data is of 1 month, if standard data is of 1 month, then in that particular case, you multiply standard data by 12 and convert it into 1 year. Till the time period is not same, we will not start away with the question. In your material, labor and variable overheads, when we were preparing a revised standard, when output is not same. Now, when we will prepare a revised standard, when the period is not same. So, therefore, fixed overheads are always dependent upon what factor? Period. Go over to your chart 4 and write down below, dependent upon period. First 3 times you all had written output, now you write down the word period. Done, beta? Now see, tell me, I'm only giving you 4 numbers, only 4 numbers and nothing else, okay. I'm explaining you these 4 numbers. In 1 year, we should have incurred fixed overheads of this much. We had budgeted, we will incur fixed overheads of 1 lakh. Second, we thought we will be producing 25,000 units. We thought both these things on the first day. But in reality, we incurred this much and we produced this much output. Rest, do not see any number and I'm speaking one line. But our fixed overheads will be governed by absorption costing. We did so many chapters on absorption costing here. Can you say there are 6 methods to find out absorption rate? Out of all those methods in standard costing, no, you will only follow output method. You will only follow output method. So these 4 numbers you all see. I thought I'll incur 1 lakh rupees. I thought I'll be producing 25,000 units. In reality, I incurred 1 lakh 10 and I produced 25,500. Take these 4 numbers in your mind and in your calci and tell me how much is under or over absorption in this period, in this year. The period is 1 year. How much is under or over absorption? Under absorption of? Everybody try to compute, please. 8,000 you all got? Beta, for under or over absorption, no, you require two things. Don't write, tell me which are those two things. Under or over absorption is the difference between which two things? Absorbed amount, don't write, and actual amount. This is the last thing that we all are doing, so just pay attention. All other things of this question we'll be doing tomorrow. Now, but for absorbed amount, you require absorption rate. For absorption rate, you require two things, BOH upon BLA. So BOH, I had thought this will be fixed as BLA 25,000. So therefore, absorption rate should have been 4. For every unit, we should have incurred, 4 rupees. Okay. Can I say absorption rate of this rupees 4? I have always taught this particular thing to you. Whenever you will actually produce 1 unit, charge rupees 4 in your books of accounts. Correct, no? Okay, so therefore you all tell me, I had thought I will be producing how much? First reply to that. 25,000. But I am hell interested in that. Absorption costing works whenever you will actually produce. So therefore, in reality, I have produced how much here? 25,500. Whenever I will produce 1 unit, I absorb rupees 4. So therefore, 25,500 into 4. This amount will be nothing but 1,02,000. This is absorbed amount. Okay. But in reality, actual overheads incurred were nothing but 1,10,000. Job is done, 8,000 rupees. If this was your chapter of absorption costing, I'll be saying this is under absorption because absorbed amount is lower. But this is your chapter of standard costing. That same under absorption is nothing but your first variance, boss. Okay. So your first variance is under or over absorption only. Okay. But if it is a variance, it should be adverse or favorable. You will tell me as per you all, this is adverse or favorable? Adverse. I can try to be saying why adverse. I can try to be saying why adverse. Okay, see, on the first day I had thought this will be our overhead, so therefore this will be our output. So therefore we had thought for every unit will be incurring how much? 4. So for every unit I should have incurred 4. In reality I produced how much? 25,500. At the rate of 4 I should have incurred how much? 1,02,000. Beta, we incurred much more here, 1,10,000. So therefore we have incurred more, so therefore variance is adverse. You all understood why variance is adverse? Now, so do remember your story of fixed overheads starts from wherever you had left absorption costing only. There also we compute under or over absorption. Here also our first variance is under or over absorption only, which is nothing but the difference of absorbed amount minus actual amount. Okay. And absorbed amount in this particular case is nothing but actual output into absorption rate. That is whatever we all have always done here. Okay, you all copy down this please. Now we are on to fixed overhead. This is our last head in standard costing, so you're going to be paying good attention to this. Okay, and then we are going to be having few mixture questions of fixed overheads and variable overheads. But listen, for the time being, fixed overheads are only dependent upon one thing, and what is that? Period. Whenever I think of fixed overheads, I think of rent. Rent is per month, rent is per quarter, rent is per annum. I think of salaries, those are per month. I think of depreciation, say that's per annum. So fixed overheads are only dependent upon one thing, that's period. Okay. So therefore, if in the problem you are given standard data for 1 year, actual data for 1 year, it is altogether fine. There is no issue about it. If ever this data is say of 1 month and actual data is of 1 year, then obviously you convert this into 1 year. Whatever is a period of actual data, that should be there for standard data. So therefore, what I got to be thinking now, in 1 year, what should have happened? And in 1 year, what actually happened? Okay. Now, once you all have this entire data, next thing you got to be thinking, yes sir, fixed overheads are dependent upon period only. Okay, but if fixed overheads are dependent upon period, still absorption costing does apply to them. So therefore, in this particular case, we need first variance. First variance under absorption costing is nothing but under absorption or over absorption. How do you compute under absorption and over absorption? Now, first of all, there are 6 methods, but out of that, you are only going to be following output method. Reason I'll tell you in CA final, I cannot do that particular thing at this stage. Okay. Now, listen now. So, if you're going to be following output method, then the first day we'll try to find out absorption rate. Absorption rate is nothing but BOH divided by BLA. So therefore 1 lakh divided by 25,000. Absorption rate in this particular case is going to be 4. That 4 rupees we all have written over here. What's the meaning of rupees 4 that we all have always told? Whenever you actually produce 1 unit, in your factory, charge, absorb, recover, apply rupees 4. So therefore, I thought I will be producing 25. That is thought, you forget it. But in reality, you produced how much? 25,500. Whenever you produce 1 unit, you charge rupees 4. So therefore, 25,500 at the rate of rupees 4. So therefore, this amount will be absorbed amount. So absorbed amount in this particular case will be 1,02,000. 1,02,000. This is your absorbed amount. Now, we want under or over absorption. So therefore, compare this amount with actual amount. Actual amount will be 1,10,000. So therefore, difference 8,000 rupees in this particular case is your under absorption because absorbed amount is lower. In standard costing, that becomes my first variance. So first variance is under or over absorption. But if it is under or over absorption and that is only your first variance, variance got to be having symbol as adverse or favorable. So therefore, what will be the symbol? For that, we got to be thinking, we thought there will be overheads of 1 lakh. We thought we'll be producing 25,000. So for every unit, we should have incurred 4 bucks. Based upon actual production, we should have incurred this, but then we actually incurred a higher amount. So therefore, 8,000 rupees was adverse over here. That's it. Okay. This particular job is over. Okay. Now, first variance is your under or over absorption. That is one thing you got to be remembering. Okay. Now, second, listen to me. I'm changing this example, okay, to some extent. Okay. Then I'll rub it off in some time. Listen. Let me change these particular two figures to 1,20,000 and 30,000. Okay. Now, everybody try to think and tell me under and over absorption will be 0. Try to take the new amounts in your mind and try to think it is 0, yes or no. Everyone, yes or no? Under or over absorption now will be coming to 0 if I take these particular new numbers. Calculated? Now, some intelligent person except me in this batch tells me why the hell it is 0. I want good explanation and I want some costing terms that you all have learned with me, not mathematics. Do not tell me this, sir, this increased by 20%, this also increased by 20%. All those things are all okay. You tell me some costing terms, why the hell in these new numbers, under or over. You got under and over absorption is 0, no? Everyone? Yes. Okay. Why it is 0? Tell me some costing terms. That is okay. That is why it is 0. Some terms that you all have learned with me in costing. Obviously, it is 0 means this and this will be same. Tell me something better.
Supplementary rate is 0.
Supplementary rate. I'll accept that particular thing as an answer. Although supplementary rate is 0, that will mean that I wanted this answer. Absorption rate is equal to actual rate. So what is absorption rate? BOH upon BLA. Sir, what is actual rate? Actual overheads upon actual level of activity. Obviously, absorption rate should have been 4. And actual rate was 4 per unit only. Okay. That is one and only one single reason why your under and over absorption can be 0. I got to be thinking like this. Why? Because this is absorption costing. Absorption costing says fixed overheads might be a lump sum cost, but we will convert it into a per unit cost. How? We will divide it by number of units and convert it into a per unit cost. So per unit cost should have been 4. Per unit cost was actually 4. That is one and only one single reason why your under and over absorption will be 0. Is that all okay? Now, from here, I am trying to be continuing. So, therefore, in this question, okay, this new question that I made, under and over absorption will be 0. Why? Because absorption rate is equal to actual rate. Okay. Now, I'll do vice versa now. Now, in this question that you all are doing, beta under and over absorption is not 0. It is 8,000 rupees. So, therefore, can we say in this particular question, absorption rate must not be same as actual rate? Is that okay? If it was equal, it would have been 0. What is absorption rate? Sir, it is BOH upon BLA. What is actual rate? It is actual overheads upon actual level of activity. Tell me the numbers from the question that you all are doing, please. BOH is how much? 1 lakh. Your BLA is how much? 25,000 is not equal to 1,10,000 divided by 25,500. Now I am doing stupidity of the highest order, but that will convince you of the logic for sure. I was trying to break this particular variance into two parts. I was trying to be thinking, why the hell this particular variance has come? This variance would not have come if absorption rate is equal to actual rate, but then it came because this is not equal to this. I was thinking, why is this not equal to this? Okay, because this must not be equal to this. Then I thought, why is this not equal to this? Then I thought, because this is not equal to this. Then I thought, why the hell these two things are not equal? Simple. Either there will be a difference in numerator or there will be a difference in denominator. There could be no other third difference here as such. In numerator, you all have written overheads. Overheads are your expenses. So therefore, difference of numerator will lead to something called as expenditure variance. In denominator, you are writing volume. Volume means output. Okay. So therefore, your next variance will be called as volume variance. Numerator gives you expenditure variance. Denominator will give you volume variance. Is that all okay? We are starting away with the second one now. So therefore, in this particular case, write down second. Fixed overheads expenditure variance. Now, I want to be taking difference of, in this particular case, the fixed overheads. So, I want to be writing some formula also for it. Can we say 1 lakh rupees are budgeted fixed overheads for the year? Is that term okay?
Yes, sir.
And 1,10,000 will be actual fixed overheads. Okay, so you all can write down budgeted fixed overheads minus actual fixed overheads. So, therefore, 1 lakh minus 1,10,000 is equal to 10,000 adverse. Third, this is fixed overheads. Denominator is volume variance. Now, just wait. It'll be this minus this. Please don't write. So, we should have produced 25,000 units. We produced 25,500 units here. But you all will understand. Can we say this data is in units? I want the variance in terms of rupees here. So, multiply by something to arrive at the rupees. As per you, can we say we should be multiplying by rupees 4? No, that's your absorption rate, right? Okay, 1 unit is equal to rupees 4. So, therefore, multiply by 4. But my question to you all is now very simple. Listen to that. Tell me one thing. This answer will be 2000. I do understand that. Tell me adverse or favorable. I should have produced 25,000 units. I produced 25,500 units. Into rupees 4. Answer is 2000. Tell me adverse or favorable. Favorable. I know that if I'll write down adverse, it will not tally. Okay, but that cannot be the reason. That is the reason that you all are trying to be thinking. Tell me a proper reason. How the hell you know it is favorable? Speak bit loudly, ma'am. Last time, please. Sorry. Speak once more.
1,500. So we increased our production by 500 units. So fixed overheads will apply to those 500 also. Our fixed overheads will remain same.
Okay, I'll take that as the answer. Listen. We should have produced 25,000 units. We produced 25,500. Next line, everybody listens. Can we say if I'll be producing more, fixed overheads per unit will fall, no?
Yes, sir.
Okay, I got to be thinking like this because this is absorption costing. Absorption costing says I will convert fixed overheads into per unit cost. So therefore, see the impact on per unit. That's it. So therefore, in this case, I should have produced 25,000. I produced 25,500. Example, in one of my batches in CA final, there should have been 500 students. If there were 600 students, can we say rent per student will fall, no? So therefore, in that particular case, cost will fall here, it will be favorable. Okay, so therefore, it will be favorable over here. Let's record this particular thing as some kind of a formula. Can we say 25,000 will be write down budgeted output minus 25,500 will be actual output into absorption rate. If actual output will be higher, comma, variance is favorable as fixed overheads per unit will fall. Is this done?
Yes.
Okay, listen. You write on your first check over here. Obviously, first variance will tally with second plus third. 8,000 adverse is equal to 10,000 adverse plus 2,000 favorable. Now listen. Now next part. See. I wanted to do breakup of this variance. Fixed overheads volume variance. I wanted to think here in 1 year we should have made 25,000 units. What the hell happened that we made 25,500 units here? Something must have happened. Now I want to be getting the reasons. Okay. Now let me put that particular question to you all. You all try to be thinking. If you can help me in that, you all are brilliant. Okay. Suppose any type of this particular question. I thought that your batches will go on for 6 months. I'll make that costing batch say as 2 months. Okay. I thought that your costing batch will be lasting say for 2 months. In 2 months, I had thought I will be doing 1000 questions with you all. That was supposed to be my output. But your batch got finished. I only did 900 questions with you all. Okay. Now, you all try to tell me what could have happened. Whatever you all will imagine in your life, I will convert that into a variance. Whatever you all will imagine. We should have solved 1000 questions in 2 months. But we only solved 900 questions in 2 months. What must have happened or could have happened that we solved 100 less questions? Use your imagination and tell me. Whatever you will tell me, I will convert that into some variance. So therefore 100 questions you solved less. You tell me what could have happened. Start to speak. But when I must have budgeted those 2 months, I must have taken into account number of days in each and every month, no? Obviously. With that much calculation, I'll know, no? Think something. Okay, chalo. What's your name? What's your name? Okay. Now, he speaks about inefficiency of the students. You all are pathetic. You all know that. I tell you all take 10 minutes and try to finish up the question. You take 20 minutes. You take 30 minutes. Obviously, if you are going to be taking more time for each and every question, can you say number of questions that will get solved will be less, no? So therefore, due to that, chalo, out of 100 questions, 80 questions were solved less because you all were bloody inefficient. Okay, now that is one reason. Now nobody will speak about inefficiency after this. Tell me some other creativity, some other reasons. What could have happened? We solved 100 questions less, yeah. Okay, if lectures would not have happened. Okay, I'll say that particular, I don't want to be saying that. Mass bunking. Beta, if you all will bunk, I will still take the lecture only. So therefore, you have not attended, but I have solved. So therefore, I am not trying to be talking of mass bunking from your side. So you have to think something as a batch. Mass bunking, I will still take a lecture. That is 100% sure. I'll punish you all only because of it. Tell me something that makes sense. Something that makes sense.
Because of network issues.
Okay. I'll call this particular thing as say idle time. Due to suppose like, I asked something to you all like always bloody didn't reply. Okay, I got angry. I told you all get out. You all did not get out. So I left the class. Okay, so idle time. Due to idle time in this particular case, say 5 questions were not solved. Okay, left are still 15 questions. Think yourself. What could have happened? Cartoon. No feelings, please. No feeling. I will still solve, if you all will not solve. Something better you all think, no. One thing to happens to you every single day. Every single day. Cartoon. That is your inefficiency, na beta. That has come, no. You will take more time, no, for solving a question. Cartoon. No. Why did I ask this bloody thing to you all, man? I am only inefficient. Listen, no. In 2 months, obviously, suppose there were supposed to be 60 days. I had thought on Saturday, Sunday, it will be a holiday, blah, 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 blah. Don't try to say that today is Sunday. But in 2 months, I had planned your classes, say for 50 days. Okay. But there was some kind of a strike, something happened and I had to give you leave, say for 2 days. Okay. Can you say if 2 days class did not happen, then the sums that had to be solved on that particular day will not get solved? Common sense?
Yes.
Output of people will get impacted because of the number of days you all will come to the class, no? So therefore, in this particular case, suppose due to 2 days getting declared off, okay, say that we did not solve 5 more questions. Okay, last, if somebody can try to tell me before I will be seeing. One last reason that happens to you every single day. But you all come late. How will it affect the output? I still start on time, no? See, ultimately now my objective is to relate this thing to the factory manufacturing. Okay, so please don't say homework section all the. I'll commit suicide. Okay, you tell me something better. Sorry? That will. Cartoon. Listen. Suppose every day your lectures are supposed to be for 3 hours. Okay. Every day your lectures are supposed to be for 3 hours. Say that after 2 hours and 45 minutes. Okay. You will start to be saying, sir, chhod do. You have to be going. Although even if we leave you, you are still over there only. So in any case, if every day 15 minutes will be getting wasted, can we say many questions will not get solved, no? So this is the reason of hours per day. If I'll try to be saying, my first reason in this particular case is because of days. Second reason is due to hours per day. Third reason is due to idle time. Fourth reason in this case is because you all are inefficient. Now in CA Inter, I don't know why, but ICA does not have this particular reason that they should be having. Okay. In CA Final, we all will be having that. So I'm going to be talking of three reasons as said: days, hours per day, and inefficiency. Is that all okay? Okay, so now come back to this particular thing right now. Listen. So therefore, tell me two numbers first. How many units companies should have produced in 1 year? Speak fast. 25. They produced how much? 25,500. So therefore, those guys have produced 500 units more. Okay. Now, we want to be knowing that due to this, how many in this particular, in this case, what were the reasons why 500 units were produced more? Okay, and for that, now I'll have to give you this particular data also. What is this particular data? See, in 1 year, I understand there are 365 days. I do understand that, but obviously no company plans for a production of 365 days here. If you all remember, absorption rates are based upon normal capacity. They are never ever based upon maximum capacity. You all recall these words in your life? So therefore, we don't try to think about 365 days. We had thought in this particular case that factory will be opening for 250 days in the year. In 250 days, all my workers combined will be coming to the factory for 1,25,000 hours. This much fixed overheads will get incurred, this much output will get produced. But then in reality, say workers were on strike for 2 days, or transportation or the local trains in Mumbai were on strike. So therefore, we closed down the factory for 2 days. So therefore, factory only opened for 248 days. In 248 days, all the workers combined came to the factory for 122,500 hours, and they work for 122,500 hours only. Fixed overheads was this much, and output in this particular case was this much. Now, with the help of this data, I'm going to be calculating the breakup of volume variance, and breakup of volume variance is only going to be because of days, hours per day, idle time, and inefficiency. Okay, that's what we are going to be doing at this particular stage. Okay, listen. Let's start it off. But before I'll start now, I require these 5 absorption rates for calculation of further variances. It will make my job slightly faster. So therefore, let's try to be doing that. You all tell me, absorption rates are calculated on the first day or the last day? First day. On first day, you will only have standard data with you. That's why absorption rate is also called as standard rate. Okay, so that is what I'd written over there. Now, you all do one thing. 1 unit is equal to rupees 4. That is this upon this, that you all know how did it come. Now you all tell me, you can use your calcs if you all want. As per me, 1 unit should have taken how many hours, beta? As per you all, 1 unit should have taken how many hours to get produced? 5 hours. How did that come? We thought that we'll be working for 1,25,000 hours. We thought that there will be output of 25,000. So therefore, 1 unit should have taken 5 hours. Write down 5 hours. Further, now you all do one thing. Tell me, 1 day is equal to how many rupees? Obviously, use only your budgeted data. We are trying to be finding out absorption rates. 1 day is equal to how many rupees? 400. Fixed storage for the entire year was supposed to be 1 lakh. Number of working days in this case should have been 250. Please divide 1 lakh by 250. So therefore, that particular thing will be 400. Now, 1 day is equal to dash hours. 1 day is equal to dash hours, dash hours, dash hours. Tell me no the answer. 5 for the entire year, 1,25,000 hours. For the entire year, 250 days. You divide it, that will be 500. Now, somebody can obviously be thinking, sir, how is 1 day 500 hours? We have only 24 hours on this earth. Beta, it can be 50 workers into 10 hours per worker. So, therefore, that will make it 500 hours. Is that okay? There could be 1 lakh hours in a day also in costing. Okay, listen. Now, you're going to be taking time for this. So, therefore, what I suggest, I'll tell you a cheap trick. Okay. What you all can do, as a rule, no, 1 unit, 1 day, 1 day, 1 hour. Okay, write down these 5 things. Then you write down rupees, hours, rupees, hours, rupees. You write down these 5 things. Okay. And then start. What to start? You want 1 unit is equal to some rupees, no? So therefore take the right hand side figure, rupees figure, divide by the left hand side figure, units figure, you will get your answer. So therefore rupees figure divided by units figure, in this case you will get your answer. So therefore this will be 4 rupees. 1 unit is equal to dash hours. You will tell me what upon what? Hours divided by units. Beta, hours is how much? 1,25,000. Units are how much? 25,000. So right hand side upon left hand side. This will give you 5 hours. Now speak super fast. 1 day is equal to dash rupees. What upon what? Rupees upon day. So therefore rupees is 1 lakh. Days is this. So therefore this will be 400. Now let me only continue. That will be better. 1 day is equal to dash hours. It will be hours upon days. So therefore hours upon days in this particular case will be 500. Further, 1 hour is equal to some rupees. That will be nothing but, you all speak, chalo, the last thing. Rupees upon hours. Rupees is this, hours is this. That particular thing will be 0.8. 1 lakh upon 1,25,000. Okay, now see. We are starting away with your next part, that is 4th one. Now, this is called as this. I told you I'm going to be talking of 3 reasons in CA Inter. Okay, in CA Inter. In CA Final, I'll talk of this particular thing also. But in CA Inter is going to be 3 reasons: days, hours per day, and inefficiency. Okay, I will not be talking of this particular part. Okay. But days and hours per day also I will talk after I talk of both of them together. Days into hours per day will be giving you total hours. First I'll talk of total hours, then I'll break it up into days and hours per day, and then I'll talk of this particular thing. Okay, so therefore we are trying to be computing total hours wala variance. Okay, that will be called as, you all write down, 4th, fixed overheads, gross capacity utilization variance. Gross capacity this. Now this variance only talks of 2 numbers, and you will tell me now how many hours workers should have worked in 1 year? 1,25,000 hours. How many hours they actually worked in the year? 1,22,500. Now only considering this and not considering efficiency or inefficiency, that we'll talk it off after some time. Only considering this. You should have worked for 1,25,000 hours. You worked only for 1,22,500 hours. Tell me, this is good or this is bad? This is bad. Why this is bad? This is important for us. It is bad because if you will work for lesser number of hours, you will produce lesser number of units. If you will produce lesser number of units, fixed overheads per unit will rise, variance will be adverse. Is this language okay? Somebody can be saying, sir, it is good. No, because workers have worked for lesser hours, that means they are efficient. No, try to be thinking what we are trying to be saying. In 1 year, workers should have worked for these many hours. In 1 year, they have worked for these many hours. Those guys have worked less. If you will be working less, automatically output will be less. If output will be less, fixed overheads per unit will rise. Efficiency, this is not efficiency beta. Efficiency, if you ever want to be finding out, efficiency should be calculated as for actual output, how many hours should have been taken and how many hours were actually taken for actual output. That will be your efficient. You all understood what did I say? This is not efficiency. This is in 1 year, workers should have worked. In case you all don't get it, I will tell you by another way. Suppose you should have come to the class for 100 hours. You came to the class for 80 hours. You all tell me, is it good or is it bad? Bad. Why bad? Because in this case, if you'll come to the class for lesser number of hours, can we say you will be solving lesser number of questions also? If you will be solving lesser number of questions, now master stroke, can we say fees per question that you all pay to me is rising, no?
Yes, sir.
So automatically in this particular case, variance will be adverse. Okay, so that's what we are going to be doing over here. That is, how many hours workers should have come to the factory and how many hours they actually came to the factory. So that is what we are going to be writing over here. So please write down. Write down. Budgeted working hours minus actual working hours. Now this difference will be in terms of hours. So please multiply by something that will convert hours into rupees. So I'll multiply by absorption rate per hour. So please tell me the numbers from this question. I am waiting. 1,25,000 minus 1,22,500 into absorption. I want to be converting hours into rupees. No, please tell me a proper rate. With what to multiply? Beta, that 4 is per unit na beta. I want, this is hours difference. Multiply by something per hour no yaar. 0.8. That is the last one, whereby you are converting hours into rupees. So therefore 2,500 into 0.8. This figure will be how much? 2,000 adverse. Now see, why it is adverse? I am making you all right. If workers work for lesser hours, they will produce lesser units. Can we say fixed overheads per unit will rise, no? Is that okay? Okay, so please write down over here. If actual working hours are less, units produced will also be less. Hence, fixed overheads per unit will rise, therefore adverse. Now see, I wanted to proceed to the fifth variance, but one thought came to my mind. What was that particular thought? Yeah, why the hell workers came to the factory for 2,500 lesser hours? There must be some damn reason here that workers have come to the factory for lesser number of hours in the year. Now, I'll say the same thing in might be some stupid way. And what is that stupid way? Example, in the next week, I had thought that your class will open for 6 days in a week. I had thought every day we will take lectures for 5 hours. So therefore, we should have taught you all for 30 hours. Okay, you should have come to the class for 30 hours. But in reality, one day we gave off. So therefore, you only studied for 5 days. 5 hours class, you used to be running off after 4.5 hours. So therefore, in this particular case, you actually studied for 5 into 4.5. That is how much? 22.5 hours. Okay. Now, if anybody will ask you, why the hell we lost 7.5 hours in the next week? Okay. How did we lose 7.5 hours in the next week? Can we say there could be only two reasons? Either there will be a difference of days or there will be a difference of hours per day. There could be no third reason here as such. And if I try to tell you right now, so therefore you can try to be thinking what will happen for this particular question. Try to be thinking, can we say how many days we close down? 1 day. So therefore 1 day into that day was supposed to be 5 hours here. Okay. So therefore 1 day we gave off. So therefore due to that, how many hours were lost here? 5 hours. Is that all okay? Second, tell me every day you should have come to the class for how many hours? 5 hours. But then you came to the class for 4.5 hours. Okay. Can we say in this particular case, this figure minus this particular figure? Can we say every day we lost 30 minutes? Tell me this thing happened for how many days? 5 days. So therefore 5 hours per day minus 4.5 hours per day into, in this particular case, 5 days that class actually opened. Can we say 2.5 hours we lost because of that only? You all will understand that this plus this does tally with the difference of this, no? I am exactly going to be doing this. In fact, you are exactly going to be doing this and you are going to be telling me this now. Can we say here we found out that we have lost 2,500 hours. Obviously, you have lost 2,500 hours either because of days or due to hours per day. There could be no other third reason as such. You all tell me breakup of 2,500 hours, the way that I have tried to tell you right now in this particular case. Okay, this thing I'm not showing you, but you tell me from this particular question that you all are doing, why the hell we lost 2,500 hours? What was the breakup? How much is lost because of days? How much is lost because of hours per day? I want proper breakup, please. Yes, and second one then will be the balancing figure. Okay, but second you try to compute it, no? So it is better. Try to compute it. Don't take that as a balancing figure, try to compute it. Think. Hmm. 248 days. Listen, now we are exactly going to be doing this particular thing only. I am trying to break this variance into two parts. You all write down 4A FOH calendar variance. Now listen, you all are not writing, but in case I have to answer the question that I asked, although I am not much interested, okay, from the academic point of view, but just I asked that particular thing. Factory should have opened for 250 days. It opened for 248 days. Can we say if it opened for 2 lesser days, every day is supposed to be 500 hours. So if we lost 500 hours per day and if we have lost 2 days, can you say we all have lost 1,000 hours over here? Is that okay? Okay. So therefore in this case, I'm just writing that 1,000 over here. That is 2 days into 500 hours. But now I'm only interested in the variance. Ultimately, I want rupee analysis. Although these 1,000 hours, I'm letting it remain over here. You all don't write. So 250 minus 248. So therefore, 2 days are lost. I want to be converting this thing into rupees. You all tell me with what rate should I multiply so that days get converted into rupees? 400. So therefore, 1 day is equal to rupees 400 no, over here. So therefore, this will be rupees 400. If I have to be converting this into a formula now, you all can start to be writing. Now, you all start to make the formulas by yourself. I don't even know the formulas. In fact, first I solve and then I try to make the formula. What will be 250? Budgeted working days minus 248 actual working days. Into absorption rate per day. This 1,000 figure you all are not writing, please. Now, you will write down over here if actual working days are less, comma, it means factory has opened for lesser days. Workers have come to the factory for lesser hours, have produced lesser units, and therefore fixed overheads per unit will rise. Done?
Yes.
Okay, listen. Now, in the fourth variance, I came to know that workers have come to the factory for 2500 lesser hours. Beta, total hours difference 30 and 22.5 will happen either due to difference of days that I have done now, or due to the difference of hours per day, which I am about to be doing right now. So therefore, in this particular case, this is now the variance that will deal with difference of hours per day. Fixed overheads, net capacity utilization variance. Now see, this is going to be dealing with the difference of hours per day. Okay, so now everybody will tell me the numbers, but don't write please. Tell me first of all, every day workers should have worked for how many hours? Tell me one number only. 500. Tell me in reality, workers actually worked every day for how many hours? You can tell me what upon what? 122,500 upon 248. Now, first of all, everybody computes this figure, please, on Calci. Tell me it is higher than 500 or lower than? Lower than. So, the moment you all say it is lower, I say variance will be adverse. Why? If you were supposed to be working for X hours, but if you work for lesser number of hours, can we say you will produce less only, no? Okay, so therefore variance is ultimately going to be adverse. But can we say this is the difference of hours per day, beta? I want to be finding out total. That due to these hours per day, how many hours were lost in the entire year? Okay, so multiply by certain number of days first. You will tell me I should multiply by which number of days? 250 or 248? It's common sense. Tell me everybody. 248, no? That is actual number of days. Okay. Once you all do that, my job is over. Can we say these many hours are lost? First of all, you do one thing. Work out this particular figure. It should be coming to 1500 hours. You all work it out. Even I have not worked out. I'll also try. 122,500 divided by 248. Take that complete thing. Minus 500 into 248. So 50, you all got 1500?
Yes.
Okay, so in this case, you are all not writing that 1500, but my one small job is done, which I was not much interested, but then I just thought I'll do it. 2500 hours were lost. Out of that, 1000 hours were lost because factory closed. One thing. Yeah, so out of that, 1000 hours were lost. Why? Because factory closed for 2 days. Is it all okay? And remaining 1500 hours were lost because workers used to be running early. Obviously, if every day you were supposed to be working for 500 hours, if you work for 493 point something hours, so automatically in that particular case, like, you know, some hours will be lost on a daily basis. Into 248, 1500 hours were lost. Now, one thing, can we say this minus this gave you difference of hours per day? When you multiply it by 248, can we say these will give you the total number of hours which are lost in this entire year? Okay, but I want rupee analysis here. So as per you, I should multiply by what outside to get the rupee analysis? 0.8. Okay, let's convert this into a formula. So therefore, we all can write it. Okay, so what is 500? Please tell me. Budgeted hours per day. Okay, you can write down, instead of the word budgeted everywhere, you can write down the word as standard also. That's okay. So budgeted hours per day minus, this will be actual hours per day, into, tell me what is 248 beta? Actual working days into absorption rate per hour. You all compute this answer. It should be 1200. It is adverse. Why it is adverse? If workers have worked for lesser number of hours per day, output will be less and hence fixed overheads per unit will rise.
Sir, these explanations we don't have to write in exams, right?
No. This is only for your reference. Now, one small check in case you want to be writing right now. Fourth variance beta was 2000 adverse. That will tally with 4A plus 4B.
तो हमने वहाँ पे 400 से मल्टीप्लाई किया, मतलब डेज को इसमें कन्वर्ट किया। पर अगर हम लोग 250 माइनस 248 करके इसको पहले 500 करते और फिर उसको 0.8 से मल्टीप्लाई करते तो एक पहले एडवर्स किया, तो वैसा कर सकते हैं हम लोग।
हाँ, you can be doing it. That's okay. Now, this is all done. Your last part. Write down. Now, whenever you all were trying to tell me the reason, in fact, the first reason that you all had told me was efficiency. So, therefore, let's do this last particular thing. Write down. Fixed overheads efficiency variance. Now see, efficiency variance, we will always do like this only, and we have always done like this. In fact, let me just remind you, efficiency variance we all have done under labor also. Efficiency variance we all have done under variable overheads also. Check your any question and ultimately you will come to be knowing whatever I am asking. Try to think of any question that we all had done, say in the last lecture. Now this is the question that opened, okay, just like that only, I'll tell you from here only. Can we say your efficiency variance for labor and for variable overheads was like this only? For 6,000, you all remember this question we all did yesterday?
Yes,
For 6,000 units, how many hours we should have taken? And for 6,000 units, how many hours did we take? And can we say then we multiply by some rate?
yes.
So in this case, I think I can try to be saying like this. Efficiency should be calculated as how many hours should have been taken for actual output and how many hours were actually taken for actual output. Is that all okay? That is whatever will try to tell us workers are efficient or not. For the first time, I'll try to write down the formula first. Okay, so write down standard hours for actual output minus actual hours worked for actual output. This will be difference of hours, so multiply by absorption rate per hour. Now, you all are going to be telling me how to be computing. Tell me, first term, first of all tell me, how much is actual output beta?
25,500.
25,500. 1 unit should have taken how many hours?
5 hours.
5 hours. You check your rates please. Your second rate is 1 unit should have taken 5 hours over here. So therefore, 25,500 units should have taken these many hours. Compute it on your calci first. This comes to how much? 127. So therefore, for actual output, workers should have taken 127,500 hours. Now everybody tells me how many hours did workers take in reality? 122,500. I have only one question to ask you. What do you think? Are workers efficient? Yes or no?
Yes.
Yes, they are completing the job faster. So therefore, they are efficient. No, in this case. Okay. So therefore, into. So those guys are efficient. Variance will be favorable. But can you say this difference is in hours? No. You convert it into rupees. So therefore, you multiply by some rate. You tell me that particular rate.
0.8.
0.8. So 5,000 into 0.8, 4,000 favorable. Write down over here. As workers have completed the job faster, they are efficient. Hence favorable. Now, we are about to be writing the last check of this entire question, but that also I am writing twice. Beta, third variance, I broke it up into fourth variance and fifth variance. I'll write down that particular check first. So, therefore, your third variance was 2,000 favorable. Write down 2,000 favorable is equal to your fourth variance was how much? 2,000 adverse. Your fifth variance was 4,000 favorable. Write down, or I can also be writing, can we say fourth variance itself can be broken up into 4A and 4B, no?
Yes, sir.
So therefore, fourth variance was how much? 800 adverse. 4B was how much? 1200 adverse. Plus fifth variance. You can write down any check. Now, everybody is going to be doing one favor to me. In your chart 4 in your textbook, you all have written one big word. Fixed storage are dependent upon what factor? Go behind and read. Period. Now you are going to be writing all these formulas that are appearing in red right now over there. Okay, please start, please finish. Finished?
Yes, sir.
Okay. Listen. Now, as part of your syllabus, no, there is something else also for fixed storage, and those are ratios. But those ratios in your module are not mentioned in the chapter of standard costing. They are mentioned in the chapter of budgetary costing, okay, or budgetary control. So we are going to be doing those particular things. Now see, it's a very simple thing. From third variance and onwards, no, from third variance and onwards, there is a ratio of everything. If you all have done volume variance, I will do volume ratio. If I have done gross capacity utilization variance, I will do gross capacity utilization ratio. If I have done calendar variance, I will be doing calendar ratio. If I have done net capacity utilization variance, I will be doing net capacity utilization ratio. I will be doing efficiency ratio. Okay. So these 5 ratios you got to be knowing as such. Okay. So let's start to be doing that in your notebooks. In any case, that's part of the required question also. You all write down please. Ratios. First. Volume / activity ratio. Now see, your and my maths is pretty okay. Okay, not that great, but not that bad also. Now see, I don't know any formula. You don't know any formula. I have not taught you all only. But volume variance. From volume variance, we are going to be doing volume ratio. Okay. Now, volume ratio is also called as activity ratio. It means the same particular thing only. Now, how to be getting the formula? I don't know. But I know this much that whenever you are trying to be computing variances, no, it is something minus something. But can you say ratio is something upon something? Okay. So, I need to be doing something upon something. Now, what something upon something? It's very simple. You see your volume variance. Okay, I'll make the formula from this particular question only. Can you say variance was favorable, beta? If variance was favorable, then its ratio should be greater than 100%. See, variance is favorable. You have done good job. If you have done good job, variance will be favorable. But ratio will be more than 100%. That's common sense here. Okay. So, therefore, I want ratio to be more than 100% because the variance was favorable. So, then this 4 is a common factor, beta. It will come in the numerator, it will come in the denominator, it will get cancelled. So, forget it. Out of these two, one will become numerator, one will become denominator. Okay. What will become numerator? What will become denominator? You can start to be thinking, sir, variance was favorable. If variance was favorable, ratio has to be more than 100%. Can you say if ratio has to be more than 100%, numerator has to be greater than the denominator?
Yes.
So, therefore, what will sit on top? 25,500. Can you say 25,500 represented actual output, no? Correct, no? So, now you can make a formula out of it. So, therefore, module says the formula is it is actual output divided by standard output or divided by your budgeted output. Your standard and budgeted output means the same particular thing only. 25,500 divided by 25,000 into 100. 102%. Second, gross capacity utilization ratio. Now, you all know the technique. You all make the formula in your mind. See your fourth variance. We are converting that only into a ratio beta. You will tell me it will be what upon what into 100.
122,500 divided by 1,20,000.
This figure divided by this particular figure. Variance was adverse, no? So, numerator has to be smaller than the denominator. Okay. You take any question in this entire world, your formula that will be getting made will exactly come to this particular thing only. Now, 122,500 obviously will come in the numerator. Can everybody reply me once? Why? Because variance is adverse, so ratio has to be lesser than 100%. So, therefore, in this particular case, it will be sitting in the numerator. Now, let's try to make a formula out of it. You all write down the formula. Actual working hours divided by budgeted working hours. So, actual working hours are $122,500 divided by 1,25,000 into 100. Please tell me the answer. 98%. You all finish off 2A, that is calendar ratio. Write down the formula, get your answer. Be careful. For calendar ratio, what formula you all have written? Actual working days divided by upon budgeted working days. This came to beta 99.2%. Now, net capacity utilization ratio. Obviously, for that I am going to be seeing 4B variance. Now, this is a common factor. Forget it. This is a common factor. Forget it. This is budgeted hours per day. This is actual hours per day. Variance was adverse, no? So, therefore, this figure will be a smaller figure. I guess this will be sitting on top. Okay. So, write down over here. Actual hours per day divided by budgeted hours per day into 100. So, therefore, this will be 122,500 divided by 248 upon 500 into 100. Is it 98.79%?
Yes, sir.
Okay, listen. Now, one small thing. Obviously, our variances tally. We write down all our checks. But there is a catch. Whenever you are computing variances, we subtract. Therefore, to check, we add back. Now, for ratios, whenever you compute ratios, you divide. Therefore, for checking, you multiply. That's common sense here. So, therefore, I am writing a small check over here. Second ratio should tally with 2A into 2B. Okay, so write down 98% is equal to 99.2% into 98.79%. You can take your calci once. You must be having 98.79 on your calci only right now into 99.2%. That should be coming to 98%. Okay. This will be efficiency ratio. Now, we'll derive the formula from here only. Variance was favorable. So, numerator has to be bigger beta. This will be your numerator. This will be your numerator. So, therefore, this word will be going in your numerator. Standard hours for actual output. Divided by actual hours worked for actual output into 100. So, this particular figure was 127,500 divided by 122,500 into 100. %, correct hai?
Yes, sir.
Okay, now we are going to be writing final checks. Obviously, as your variances tallied over here, beta, your ratios will also tally, no, but they'll tally by multiplication. So, 1 should tally with 2 into 3. So, write down that particular thing, please. I think it should be tallying. So, 102% is equal to 98% into 104.08%. You already have 104.08%. Just multiply by 98% no once. That should be coming to 102%. Or first ratio should tally with 2A into 2B, 99.2% into 98.79% into 104.08%. 2 will tally with 2A into 2B into 3. Done, beta? Listen. Now, in this I have taught you all activity ratio, done. Gross capacity utilization ratio, done. Calendar ratio, done. Net capacity utilization ratio, done. Efficiency ratio, also called as employees productivity ratio. You do remember this particular thing, please. It's in the chapter of labor costing in ICA module. Okay. So, productivity ratio I have done now for you all. Then, these three are extra ratios. They have got nothing to do with the variances that you all have done. Just standalone ratios only, beta. Okay. So, let's start to be doing them. You all write down. You all write down independent ratios. First, standard capacity usage ratio. Standard capacity usage ratio or capacity usage ratio. Whatever word those guys might use. Now, this thing is simply nothing but, now you got to be understanding this. You all write down normal capacity divided by practical capacity into 100. But both these figures, no, you take in hours only. So write down over here in hours. That is always better. Now, I want you all to remember something that you all have done in life. Something that you all have done in life. Listen. From this data, this is the same data that you all have written in your notebook also. Tell me, how much was supposed to be my normal capacity in hours? 1,25,000. Normal capacity, absorption rates are always based upon normal capacity. It is a capacity you thought you're going to be using, 1,25,000. But if you'll remember, practical capacity is a capacity you can use. That some will always give me separately. Okay. So therefore, those guys have told me. Also compute the following ratios, assuming practical capacity to be 1,50,000. Okay. So therefore, now you all can write down 1,25,000. Normal capacity is a capacity you wish to use. So therefore, I have planned to work for these many number of hours. So 1,25,000 divided by 1,50,000 into 100. 83.33%. Now these things you all should know only. Now these are not derived from variances. So I cannot try to tell you like, that see the variance and compute. These things are something that you all should be knowing as such. Okay. Second, actual capacity usage ratio. Write down. Now this is simple, actual capacity. So now do not take normal capacity. Instead of that, use actual capacity. So therefore write down actual hours worked divided by practical capacity into 100. Now, actual hours worked. Actual hours worked. Tell me the number. 122,500. Practical capacity 1,50,000 into 100. (81.67%). Third. Now this is a super big name. Listen. Actual usage of, what nonsense, budgeted capacity usage ratio. We'll write it only, no. So what nonsense? We'll write it only. Write down actual usage of budgeted capacity usage ratio. Now, obviously, actual usage of budgeted capacity, you all will understand. Actual usage means you should be taking actual hours divided by, you all tell me how many hours. So, budgeted capacity means how many hours you thought you are going to be working. You all tell me how many hours you all thought you are going to be working. Tell me the number. Tell me the number. 1,25,000. So therefore this is normal capacity into 100. So 122,500 divided by 1,25,000 into 100. Just do this, then something you all will realize also. 98%. Beta, this exact same thing you have already done before also. Tell me which particular ratio is exactly this only, beta. Your gross capacity utilization ratio. It is exactly the same particular thing. So do one thing. In your textbook, in your textbook, okay. Just this thing you all connect with this. Both these things are same only.